Welcome back now. I'm going to take you straight to the KBC Garden Studios. I can see Wairimo Njenga is ready to continue with the interview as we analyze the 2025-2026 budget. Wairimo?
Well, thank you, Cynthia. We're still here at KBC Gardens. And as I had earlier on told you, I am with Helena Chieng, who is on my farther left, who is a tax manager at EY. And on my immediate left is Robert Minor, member of Public Finance and Tax Committee at ISPEC. Picking up from where we left off, Helen, we were talking about the revenue collection targets. And the National Treasury did indicate today when the CS Mbadi was giving his speech, he said the 2025 budget will be funded by reforms in tax administration. And he did indicate that there has been a broadening of the tax base. And if so, I would like to hear from you, Helen. How do we do that without overburdening the already strained taxpayer?
Well, very, very interesting question, because Revenue Authority right now is tasked to collect or expected to collect about 2.75 trillion in the upcoming financial year. And just based on historical trends, we've seen them not meeting their targets over and over again. So definitely this is an ambitious plan by government to expect that even in this financial year, we'll be able to collect the targeted revenue. Now, noting that even last year we had a very huge deficit in that regard. So we're still waiting to see what the Revenue Authority would do or the Treasury would do that's new from what they have been doing in the past. But I know the actual plan is to expand the tax base. And if you look at our medium-term strategy, some of the measures that the Treasury sought to undertake to improve our tax base was to now capture the informal sector. You know, they contribute very greatly to our economy currently, but you'll find that a very small portion of Kenyans actually pay tax. So they want to find how they can nap this informal sector or cap them into the tax bracket, so that at least we are able to benefit from the revenue from this sector. And we've seen them doing this through the simplified taxation process. We saw turnover tax being introduced, albeit of course the uptake was very low and not as expected. We've seen them trying to simplify the technology for tax compliance for the common wananchi to be able to comply. We've seen them approaching, you know, levying certain taxes on the common basics that they need to do their trading, etc., and also levies, so that at least we expand the number of people who are contributing to the tax bracket in Kenya. And I know another method that they have tried to do is, especially in the real estate sector with respect to rental property, you know, they've tried to try and make sure that every landlord is paying their fair share of rent, and they've tried to also simplify the taxation regime for residential units in Kenya through the monthly rental income. And they've introduced a lot of technology in that regard just to encourage people to do that. And another focus is on high net worth individuals, you know, where now we see very controversial proposals in the bill to try and curb the high net worth individuals. So trying to expand the number of people who are paying tax, and also again facilitating compliance. You know, a lot of people are currently not or hiding taxes. So Revenue Authority is tasked to ensure that they make sure, and we see this in assessment, that everyone pays their fair share of tax, and where you have not complied, then the law comes in to make sure that you comply, just to expand. So these are not new things. We've already seen them in the current financial year. We've seen them implemented also in 2023-2024 financial year. So just waiting to see in this current financial year what they would do differently. And ideally what I would propose is stakeholder engagement, you know, civic education, make people want to pay tax, understand where their taxes are being used, so that we all now participate voluntarily in contributing to this tax revenue. But as it stands currently, if the trend continues, I'm not seeing us meeting that target, but we remain hopeful as taxpayers and citizens of Kenya.
Okay.
Yeah.
Robert, earlier on you mentioned that about 22 million have been captured as taxpayers. But then again, there's a huge difference between the taxpayer and the taxpayer who is actually paying this tax. So then how again do we ensure that everyone is paying tax collectively?
Okay, thank you very much. So yes, we are talking of 22 million Kenyans, meaning those are adults in that sense, because for you to register, those are adults. So those are people who are potential candidates to register and account for taxes in Kenya. And I've also had the Kenya Revenue Authority give statistics that just about 5 million Kenya shillings actively pay tax. You know, we have I think over 10 million who are registered. You know, they have a PIN number. But how many are actually making remittances, either through, you know, PAYE, if they are employed, or through their businesses? The number is very low. Now, and the question then that one would ask, why is this the case? And I think there's one aspect that is, one, we have a very huge informal sector in Kenya. Now, the informal sector, there's no clear system such as the one in the formal sector, where if you are employed, your employer is responsible for deducting your taxes. In the informal sector, it is largely to do with voluntary compliance, meaning someone will have to come forward, declare their income, deduct their expenses, and pay the balance, you know, based on the tax rate that is applicable. So that it seems like people are still not at a point where they appreciate the role of taxes in Kenya, either because they do not feel the government is doing enough. And the public perception out here is that, to a large extent, when you go to the informal sectors, is that the government is doing nothing. So the messaging by the government has to be clear that, yes, the government may not be doing everything, but they need to demonstrate with actions a few things that they are doing, and they can say, you know, we are not able to do 100%, yes, but we've actually managed to do X, Y, Z. So getting to win the trust and the people from the informal sector to contribute to the kitty is a key one. And just to add on whether KRA is doing enough, I think they are doing quite a bit. From the past 10 years, KRA may not be meeting their targets. They've not been meeting, most of the time they don't meet their targets. But what we see is that there's a growth in the annual collections. When probably 2002 or 3, we were collecting less than a trillion. Now we are, 2.2 trillion Kenya shillings. So there's a growth in the tax collections. The issue is we are not getting as much as the government would want. But it is also good to remember that you don't collect taxes from a vacuum. You're collecting from an economy. So if the economy that you're collecting taxes from is not performing very well, definitely you will struggle to collect the taxes. We have over 500 billion of pending bills. Now these are contractors. These are people who supply to the government and other agencies. They've not been paid. Can you go and demand that tax from, KRA can actually go and demand tax from that person, but can they actually afford to pay? They've not been paid. So there's a ripple effect when one part of the economy is not performing that affects tax collections. But I think from a revenue authority perspective, they are trying and they are doing quite a bit based on the interactions we have with them. But when the economy is not doing very well, they are also affected by that. Yeah.
Now, Helen, still on the expanding the tax base, we have seen proposals in the Finance Bill 2025 where there is enhancement of e-teams so that they can bring in the informal sector into the tax bracket. We have seen blockchain-based monitoring of the real estate sector and monthly rental income program, taxation of the digital transactions, strengthening of iWhistle platform to report tax practices. Are these areas enough to ensure that the informal sector is paying taxes as well?
Well, in my opinion, there is only so much that you can do to increase revenue collection in a country. And one of the most proposed measures is to enhance technology or simplify technology with an aim of ensuring that people are able to pay tax at a more convenient, in a more convenient way. And introduction of e-teams has actually really helped because now Revenue Authority has visibility of the transactions that are happening between businesses and individuals alike. And on the side of the taxpayer, they've made it very easy for them to be able to generate those invoices from the electronic tax invoice management system. And we've seen things like the simplified e-teams method. We've seen things like enhancing iTax capabilities to improve the MRI collection, etc. So one of the ways to actually make tax payments very convenient, is improving technology. And right now we're just waiting to see the fruits of that technology, how it will impact our revenue collection going forward. And you know, this issue of e-TIMS was introduced first in the VAT Act, where registered taxpayers were supposed to issue valid tax invoices, but then now it was expanded now to capture all businesses. So provided you're making a purchase or a sale, you need to have a valid invoice in that regard, which will be transmitted through the system. So Revenue Authority will be able to see what are your incomes based on the invoices that you're issuing and what are your expenses. And therefore, we expect that, of course, taxpayers will be now able to declare the actual income and expenses from a reporting perspective. And also we've seen things like on the monthly rental income collection, we've seen them increasing the number of agents for collecting rental income, you know. So all these concerted efforts are targeted towards raising revenue. And we've seen, like Robert, I like what Robert has said, that there is growth in as much as we are not meeting our targets. So probably someone might call them ambitious, but they are increasing the level of compliance. And actually, currently 2024, as at 30th June, when people file the returns, we'll be able to see the fruits of now the e-TIMS that we introduced from 1st January 2025. Yeah.
Robert, the government has scaled down its revenue target by 91% through the finance bill, opting not to introduce new taxes, but aiming instead to collect just 30 billion shillings. Maybe you can share with us what strategy is at play here?
Yeah. So one aspect that I think the government is dealing with is we are coming from a year when we had a lot of issues in Kenya. Last year, the protests that took place last year. So caution was obviously at the forefront where the thinking was, big and about the bill, because there was no way the government was going to introduce as many taxes as they had proposed last year. So caution is number one. The other thing that I would say is that, and I've also heard the CS say that he does appreciate, for employees, we are the topmost level, meaning you cannot tax employees anymore. Because you have the tax rates have gone up, you've introduced levies, the affordable housing levy, shift, the percentage is higher. So we are at that point where you cannot get more. Otherwise, you then risk losing the motivation from these people. Now, with that appreciation in mind, that's why the government is talking of now trying to look at the loopholes that are there, and then encouraging those who are actually not paying anything to come into the tax net. Obviously, the issue of the tax expenditure is the key issue in this bill. There's a lot of repeal of incentives and moving of items from zero rating to exempt or completely making them subject to VAT. And when I was starting my career almost about a decade ago, in 2013, they introduced the VAT Act 2013. That act was very neat, meaning we had very few items that were being given either exemptions or zero rating. Come now today, more than 10 years later, they have increased the number of items that are either being given exemptions or zero rating. And why is this the case? In some cases, it's pure political expediency. So a politician is looking to please someone, or they're trying to get something in, and they have to, then those goods are added there, or services. Now, removing those goods from there, now that again creates another friction, because everyone is saying, you give us this incentive, we are doing away with it. But there are certain things that are probably given because at that point in time, that was the priority. But 5 years down the line, the priority might be different. So ensuring that these tax changes that are happening every year are not happening, tax consistency and ensuring that we have stability of the tax measures is important. And that is the only way that the government is going probably to ensure that the tax revenue grows. Yeah.
Okay. Helen, sticking with the finance bill as we come to a close, my director is telling me to wrap up, but there's one proposal to limit carry forward a period of tax losses to 5 years. I would like to hear from you how this might affect investors and startups, and also the proposal to repeal investment deductions, including those in special economic zones.
Wow. Well, that 5-year carry forward definitely was met with a lot of resistance, and I know the CS and the Honorable Kuria can attest to that, because you see, the reason why we carry forward losses is because you've started a business, right? And probably your business is capital intensive, and therefore you have some capital investment or allowances that you're supposed to claim. And these are huge amounts of money. So if you're told that you're only carrying forward the losses for a period of 5 years, remember, for startups, the period it takes for them to change or to shift to profitability can extend beyond the 5 years, you know. So now telling them that every loss that you incur, you can only carry forward for a period of 5 years will definitely hinder growth of businesses in Kenya and disincentivize taxpayers in Kenya. And again, also, it also impacts in our foreign investments, because imagine I'm somewhere sitting in a different country. I want to invest in Kenya, so I've done all my budgets, my proposals and everything, and then suddenly the law is shifting. And I want to invest in a capital intensive unit. So you see, at the end of the day, it's not helping businesses. You should be able to pay tax only when you make a profit, and that's actually one of the strategic pillars of the Income Tax Act. You're only paying tax when you make a gain or a profit. On this issue of the investments, definitely it will affect, because removing that accelerated investment allowances, and maybe just to clarify, it's not that they will not be allowed to claim investment allowances. It's just that they will claim it over a longer period of time, as opposed to currently when they're allowed to claim all of it in the first year of use, 100%. So obviously, again, these are huge investments, because it's over 200 million investments that are given that incentive. So definitely it will affect the thought process of investors, because the law keeps changing, you know, and ideally it's not good for our economy in terms of investments.
As we wrap up,
each
of you, final remarks. 1 minute, 1 minute.
Thank you. So mine is, it's a good start. I mean, I think the currency, yes, is more aligned and attuned with the reality on the ground. He has also opened up the national treasury more, you know, to the general public. So our hope is, you know, the measures that they have proposed, and particularly the ones that are affecting the common mwananchi, actually implemented to get the real benefit. Thank you.
Thank you. Helen?
So for me, my closing remarks would be, as a country, I think we are on the right track, because awareness is the first step to now turning the ship around. And so, and I know the government's heart is in the right place with all the reforms that are coming in and are being promised. So as a taxpayer, as a tax practitioner, and also as a citizen of Kenya, we can only support the government towards achieving the fiscal optimization that the government requires. And also we just hope that as time goes by, especially now from this financial year going into the next, we'll be seeing very significant changes with respect to expenditure and revenue collection at the same time. So for me, I want expenditure to go down, and also tax to also go down, and also the debt burden to also go down. So we can only support government at this point.
Thank you, Helen. Helen is the tax manager at EY, Helen Achieng, and Robert Minor, member of Public Finance and Tax Committee at ISPAC, helping us to break down the 2025-2026 budget. And as they have rightly put it, the budget did reaffirm government's commitment to key policies and strategies as outlined in the bottom-up economic transformation agenda, with a focus of driving sustainable economic growth. We put a cap on this tonight's interview. I take you back to studio with Cynthia Nyamai. My name is Wairimu Jenga. Have a good night.